Well, hi. We start the day. Yesterday, what we saw was a good selling happening in the markets, and today again we are going to see a market basically opening gap up. So good positive reaction because primarily the global markets they actually are giving a good sort of positive cues. Now between yesterday when the European markets they actually started going down sharply, and then again we started following them, and then what we saw that the U.S. markets actually gave actually good positive cues. Now, what changed was a slight reduction in the risk aversion. We saw that the gold prices they cooled off, the base metals they actually rose sharply, and in fact, copper prices they actually rose to a much new higher levels. In fact, copper basically is now touching around 6,700 levels. That basically bodes very well for in terms of sentiments of metal stocks. Now, apart from the crude oil price cooling off, which is generally negative for stocks like ONGC, Oil India, Hindustan Oil Exploration, I would say that because the refiners in the US, some of the refiners they actually had to shut off because of the cyclone. That the combine the two factors that tells me Asian refining margins actually could stay stronger for some more time. In fact, the gasoline cracks they also could stay stronger. So all in all, for Indian refining stocks, it's good news. While the oil producers could actually face some sort of pressure because of subdued oil prices, the refiners in particular like Reliance Industries, IOC, BPCL, HPCL, in fact HPCL, IOC more, those actually could have a good time. So that's about the oil price. Metals again, Hindalco have a very good focus on Hindalco. Copper price directly proportional to Hindalco stock price also. But downstream operations are also there. But again, then it's good for Hindalco, good for Hindustan Copper. But then Hindalco is the one which is an outperforming stock. Vedanta also, I would say, because the metal prices they have been good, Vedanta also should see a good sort of sentiment rub off, and also metals which are generally high beta stocks. If you are having a positive rub off from the risk aversion, markets are slightly going up, and then your metal prices, and usually metal stocks they outperform more. Then we go to how actually is looking the expiry and the market breadth. Yesterday the market breadth was very bad. 90% or most of the top traded stocks they were in red. Either there was shorts happening or selling happening, or there was actually long unwinding happening. Today, I would expect some sort of recovery happening in the markets because Nifty is set to open gap up, and then some stocks are going to see some sort of relief rally. Rollovers largely they basically are not surprising so far. Now, what I would think right now is that Bank Nifty is actually not a place where you should be looking really trade because Bank Nifty is going all over the place. Yesterday was short build up. Bank Nifty has not been able to cross some very critical levels. Resistance on the upper side 24,500, support on the downside 23,800. We have been playing in this range, so keep these two levels in your mind while you're trading. Nifty again 9740, 9950. These two levels are right now for the trading strategies. 9950, I would think very strongly that it's highly unlikely we are going to break between today and tomorrow. That's how the bets are telling, the way data is telling you. In terms of trading range for September series, so far the trading range is looking like 9,700 to 10,000. So perhaps consolidation is there for some more sessions till the time you start seeing sector leaders showing some sort of decisive trend. The next question is that is about the market, but there is always an opportunity in the market where stocks are looking good. And I would say it's about the mid caps, not the large caps. Focus on the mid caps. And the mid caps like Bombay Dyeing, garment stocks, I talked about it, that those who are doing good, they hold it out yesterday. So keep an eye on Bombay Dyeing. L&T Finance Holdings in terms of the NBFC pack, L&T Finance Holdings was also looking good. Chennai Petrol from the refining pack actually was seeing good accumulation. Case International again, good numbers came some time back. So Case International also looking very good. Then Tin Plate, the Tata Group stock, was looking really good, and then another stock Shreyas Shipping, slightly higher risk, but then again that stock was also seeing good accumulation. So overall I think these stocks basically are the ones which could outperform. All are into the mid caps category. So perhaps the mid cap is a place where there is much higher action, and tactically is a place where you could look really for what could be offering a good trading opportunity. Fundamentally, if you are an investor and you want to understand how the market is doing, perhaps the markets are not looking that bad. But then again, just keep on watching your own stocks. If the stock prices are falling, are looking really attractive, just keep on taking them. But yes, for today, the opportunity is in mid caps. So I'll see you later. Take care.